All right, so Mark Zuckerberg, he stepped to the plate. Now, yeah, he only had to overcome extremely low expectations. That, of course, though, the reaction is helped powering the overall market. Now, the bar is going to be a lot higher when Apple reports their results after the bell. So can Tim Cook deliver? I want to bring in disruptive tech research founder Lou Basenese, along with Keith Fitzgerald of the Fitzgerald's Group. And Lou, I got to start with you, my man. So here's the thing. I was checking it out. Until the last time Apple reported, they've been smacked 5 quarters in a row on the day they reported. The last time, though, the stock soared. And I think because the street wasn't expecting much. What are they going to deliver tonight? What can we expect?
Listen, I think you expect me to always say bye, 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 Apple, like Jim Cramer clone, but I'm not going to do it this time. I think you hold it into earnings if you own it already, and you wait for a dip because the first quarter is seasonally the weakest for Apple. The market needs Apple more than Apple needs the market right now. And look, if they swing and miss, it's okay. I think we know we're going to get slower growth. They projected that. They telegraphed it, about 5% revenue growth on the top line. What's missing is what we can expect moving forward in the next quarter because Apple stopped providing guidance. And I think if you get any negative or cautious comments about the second quarter growth, that's going to scare people out and it's going to create a tremendous buying opportunity.
If they beat,
it's like basketball.
Lou, if they beat, where would the beat come from?
I think the beat is going to have to come from the iPhone unexpectedly and stronger than expected growth in services, right? Apple's building out this ecosystem. The more and more units they get out there, the more that network effect kicks in. So, look, I think it's really, we're going to see also look at how much they increase the dividend and then also how much they increase the buyback program. So those are 2 big things to look at.
Yeah, Keith, I'm hearing $100 billion on the buyback and like a 20% on the dividend, like some crazy number out there, and they've got the cash. What are you thinking? Are you buying?
Well, I tell you what, I have been buying all week. So respectfully, I'm going to push back a little bit on Lou and take the other side of this coin. I think Apple, I'm less concerned about the daily squiggles. Agree that if there is a pullback, it's going to be an amazing buying opportunity. But nobody's getting rid of their iPhones. The products and services are firing on all cylinders, as is every other business unit that company has. So I don't care about the short term. Longer term, 3-5 years out, this is a stock you are going to kick yourself if you don't own.
Let's talk about the other big name, Amazon. Now, they reported, the last time they reported, the stock absolutely skyrocketed. It was up 11% that day, 13% for the week. The best reaction going back to April of 2015. So Keith, can lightning strike again?
I don't think so. It's possible. I might be completely wrong, Charles. That's always a possibility. But the bloom is off the rose for me with Amazon. I think that there's a lot of pushback legislatively, legally. I think they're struggling with the consumer. They've got advertising exposure. I don't know how this one plays out, and I don't want to touch it.
Keith, I'm sorry, Lou.
Look, I think the key number to focus is on AWS. It's been accelerating the growth since Q4 of 2020. They had 28%, then 32%, then 37%, and then 40% print. If they don't print 40% or higher this quarter, I think people are going to get scared because Microsoft is running steady at 50% growth for
Azure was like 46, 47% earlier in the week. So yeah, that's your benchmark. Hey, let me ask you guys real quick about these non-profitable tech names. They were all the rage in 2021, a little bit first quarter 2020. They all the rage in 2021, the first quarter. They're crashing like big time back down to earth. Looking at a name like TikTok, Teledocs rather, today, and the reaction to it. Keith, are you sifting through these ashes at all? Are there any diamonds in the rough, so to speak?
Well, I am, but, I'm making decisions as the means of allocating. I've got to weigh alternatives. That's how I think. So I look at a company like Teladoc, which is probably a pretty darn good company. But again, this is one of those things that was a COVID darling. The shine's come off that one. So I'd rather look, if I'm going to go with virtual medicine, you can't fix a broken arm through a video camera. So a play like Walmart that's going to be the biggest health provider in this country for 3, 4, 5 years from now, that's where I want to focus as opposed to risking more to buy into Teladoc.
I love how you pivoted off of unprofitable tech to one of the most profitable companies in the world. Lou, you got 30 seconds. Anything in that ash pile that you would look at here?
No, man, more red flags than at a communist parade with all these COVID hangover stocks. I wouldn't go anywhere near them.
All right,
I'm loving the semiconductor space. So
Semis.
I love a company that just beat expectations on Atomera. So it's an up-and-comer that can apply pick and shovel to the entire semiconductor market from lagging edge to leading edge.
And Semis act great today. Intel also reporting after the close. Lou Keith, and Lou, yes, you won the Quip Award.